Today we are going for the next topic, that is the balance sheet. I think you will know about the balance sheet because last year you are seeing the balance sheet in sole trade, financial statement of sole trade. Same balance sheet here. First we have start with the definition of the balance sheet. Balance sheet means balance sheet is the statement that we are making for the knowing of financial position of any business. Okay, clear? Balance sheet is what? Balance sheet is the statement that we are going to make for the knowing of financial position of any business. In this balance sheet, two sides, one assets and second liability. Liability side we are presenting all the liabilities, and asset side we are going to present all assets. After that, both sides will come equal. This is the definition of balance sheet. Now we are coming in not from profit organization. In the non from profit organization, prepare the balance sheet for ascertaining the financial position or knowing the financial position of organization. The preparation of their balance sheet is on the same pattern as that the business entities its show assets and liabilities as at the end of the current year or working year. Assets are shown on the right hand side and liabilities show on the left hand side. However, there will be a capital fund or general fund in place of capital. In this balance sheet, we are not going to show any type of capital in the balance sheet of not from profit organization. On the place of capital in the not from profit organization, we are going to show capital fund, and this capital fund is same like that capital. In this balance sheet, same assets and liability side, we are take all assets or liability from receipts and payment account. First, all the revenue expenditure and revenue income we are transferring in income and expenditure account. Then remaining things we are taking in this balance sheet. All capitalized expenditure, capitalized items like legacy or other things, or capital fund, or members fee, life membership fee, these all we are taking in the liability side, capital fund also. Then in asset side, we are going to present all the assets. We are going to present all the assets with the adding of last year assets plus if in current year we are going to purchase any type of assets, then add, and less if we are just selling any type of assets. Same time it's become necessary to prepare balance sheet as at the beginning of the year in order of to find out the opening balance of capital or general fund. Actually, in this not from profit organization, we are making two balance sheet. First opening balance sheet and second closing balance sheet. In opening balance sheet, we are going to take all the assets and liability that is related with the last year. By the showing of all assets and liability, we will go to take the difference. That difference account amount is showing as like a capital fund. Then this capital fund we are transferring in closing balance sheet, and the closing balance sheet start with this capital fund. Okay, clear? That capital fund we are finding by the make one more balance sheet, that name is opening balance sheet, and by the making of opening balance sheet we are going to calculate the capital fund, and that capital fund transferring in closing balance sheet. Now we are going to take some important point which needed when we are going to make the balance sheet. First, take the capital or general fund as per opening balance sheet, and then add surplus from the income and expenditure account or less deficiency that is also coming from the income and expenditure account. Then we are going to see life insurance fee, legacy, life membership fee, and other type of capital receipts. Then next, take all fixed assets from old balance sheet and then add new assets purchased during the year, and then less if any type of assets we are going to sell, and then less depreciation. Next, compare item of these receipt side of the receipts and payment account with income side of the income and expenditure account. This is to ascertain the amount of subscription due, outstanding, prepaid, or any type of advance. These all we are knowing by the tallying of the income and expenditure account and receipts and payment account. Next, similar, compare items of the payment side of receipts and payment account and income and expenditure account. After that, we are just see some different type of assets and liabilities. These all we are taking in liability side and asset side. Next, we are going to see the pro forma, how to present the different liability and assets in the balance sheet of not-for-profit organization. Now see, it's a pro forma of balance sheet. First we are going to see the liability side. First we are present capital fund, that opening, then add surplus or less deficit, then add capitalized income of the current year on account of legacy, entrance fee, life membership fee, then closing balance. We are going to present outside. Okay, then special fund or donation, previous balance, last year balance, if any, then add receive for the item during the period. If any type of new donation or fund we are receiving, add, then add income earning on fund. If we are going to earn any type of income, as like that, if sports fund is there and we are just earning any type of income by that sports fund, so that will add here our donation, investment, then less any type of expense paid out of fund. If we are going to pay any type of expense by this fund, so less that our donation, then net balance we are going to show in this amount column. Then credit for purchase and or surplus, bank overdraft, outstanding expense, income received in advance. These are the head which we are going to show in liability side. Now I am going to the asset side. In asset side, start with the cash in hand and or cash at bank. Actually, when we are going to make the opening balance, so then in opening balance we are showing opening cash, opening balance of receipts and payment account in opening balance sheet as a cash, and closing balance of receipts and payment account so as a cash in closing balance sheet. Then outstanding income, prepaid expense, stock of consumable items, then previous balance, add in any assets is there, then add, just show the assets, then add purchase in the current year, less value consumed during the period. If any type of value consumed during the period, less, then previous balance, add, if assets is there, then previous balance, add purchase in the current period, less book value of the assets sold or any type of depreciation. Okay, if any assets we are going to show or any consumable goods we are going to show, so first we are showing the opening balance, then add any type of purchase, then less any type of utilization and time of assets, previous balance, then add purchase of new assets, then less depreciation or sold, then last closing balance. Okay, clear? It's a balance sheet which we are making in the non-from profit organization. This is the pro forma of balance sheet. These all items relate with the non-from profit organization, and by the closing of that account, we are going to make this balance sheet. Okay, clear? Thank you.